Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Tuesday edition of Benzinga's PreMarket Prep, brought to you by Thinkorswim. I'm Spencer Israel. No Joel again today. Still in Florida, we think, but we've got Dennis Dick with me here. On today's show, we are talking. We've got Nick Shaheen on at 8:35. He's our options guy, so we'll talk to Nick. But in the meantime, we've got Twilio's options or lockup expiration is today. We had a few earnings still. Carnival Cruise Line, Darden Restaurants, BlackBerry, General Mills, Nike, FedEx are going after the bell. We've had a couple ratings changes to discuss as well, and we'll see. We'll see where all that takes us. So, Dennis, how are you doing on this frigid Detroit/Windsor morning?
When is it going to warm up?
It's been single digits now for like a week straight?
I know. This global warming thing, I'm starting to challenge it again.
You've got company in the administration, so you're good. You've got company. You're not the only one. No. I don't have an answer for you. It's an endless parade of wake up and it's 6 degrees outside. So I don't know.
Well, we got the market trading up here, so it's not making the market cold. The market is hot still. S&P futures trading up here this morning. Also, oil trading up this morning. So everything looking peachy again here after a little bit of a weakness there just in the last couple of days. What are your thoughts here, Spencer, as we go? We never, get your opinion here on the markets. We ask everybody, all the mavens that come on. What's Spencer Israel's thoughts here as we go into the end of the year? Are we going to get this Santa Claus rally after Christmas? Or have we already experienced the Santa Claus rally?
I don't give my opinion. No. My opinion is that it's the end of the year. Everyone's in a really good mood. Holidays. We've rallied now for, 6 weeks or the whole year pretty much. No, I mean, nothing's going to happen between now and the end of the year, if that's what you're asking.
You don't think we're going another 5%? Typically, and I don't know what the stats are, but I think it's like 1.5% is the typical rally or the average rally after Christmas. So between, and if you talk to the Stock Traders Almanac there, they actually say that the Santa Claus rally is from the 26th till the first 2 days of January. So if you're looking at it from that way, and I think the stats are like 1.2 or 1.3%. It's almost 1.5% that the average rally in that period. Do you think we can tack on another 1.5% after Christmas?
Oh sure. No problem. I'm worried about January. I mean, go back the last few Januaries, and it's been rough. So I'm not worried about. I'm not thinking too much about the next 2 weeks. It's sort of off my radar. I'm thinking about January and 2017 because I'm concerned by this rally, and all it takes is one random catalyst. Trump says the wrong thing to China, and who knows?
Yeah, that's a good point there.
And who knows what happens, or so.
There's still some uncertainty going forward here, and the market is pricing in zero uncertainty. So that's obviously why I'm cautious too. And I've been a little more cash than obviously you should be here in this portfolio. So I've been wrong here for a while, and obviously I've tried to call the top of the banks a few times too, and that has been to no avail because those things continue to go higher. Although yesterday, I still think the banks have topped out. I said it 3-4 days ago on the show. They went up there and challenged those highs, like Bank of America. If you look at the chart of that one, it's put in 3-4 tops right in the same area, right around 23.30, 23.39. Yesterday got up to 20. Or 2 days ago got up to 23.32. Yesterday, it was down all day there. The banks were just weak yesterday, but I think the banks, short term, are due for a pullback here. I don't know, but then you say that and then they pop the next day. So it's been a tough run for the shorts.
Speaking of cash, I was reading this morning that Warren Buffett, or I should say Berkshire, will likely end the year with $100 billion in cash. And so on an absolute basis, that'd be the most that he ever had on the sidelines.
Also, he's a little bit cautious here, too. Even though he was talking big about Trump, he was saying yesterday, I saw it go through my timeline, that he was going to be, or needs to start getting aggressive with this Trump administration. And aggressive meaning buying stocks. So maybe he's going to put that cash to work.
Maybe. Let's tackle a couple earnings. We got a few trickling in today. Which would you like to hit?
Well, let's jump into General Mills here. Your food stock is getting the beat. So out of all your earnings stocks, this one is getting hit the hardest here this morning. Again, defensive stock, they kind of been out of favor anyway, so they're probably looking for an excuse to hit it. But I saw something about sales being down 7%, so that doesn't sound good.
Yeah, well, 85 versus 86 cents, 4.1 billion versus 4.2, and I did see the 7% number as well.
And stock is trading down 3.6% here in the pre-market. If you look here, we were running into a wall of resistance at 64. You can forget about that. We're going to talk about support here today because we're going to challenge it. The low of the move, $60.37. That was back on December the 1st. And if you look here this morning, it has been trading down near that low already. It's bounced once off of those lows. It got down to 60 and a half there. Bounced a little bit here. We're trading a bit at 60.75, but I think we might challenge the whole $60 level today. Takes that out, you start to get concerned, but there's some value here. Long term, you start to think, okay, everybody had to own these stocks in the summer. They had ridiculous runs. General Mills going up to $72.95. It's starting to get realistic here again. I think you get back under 60. There's a lot of, memory. We say price is memory. And between $55 to $60, if we're just looking at it, it traded there for the majority of 2015. So I got to think, maybe 60, maybe a little bit early. If it takes out 60 today, I think, that's still a potential bouncer if it doesn't. But other than that, you got a lot of, memory there from 55 to 60. So I don't think it's just easy sledding for the shorts under $60 for General Mills. Although 3.16%, the stock is out of favor, these stocks, the dividend plays. You got to be cautious with this.
Well, I was going to ask you, where's the rotation? That's what I was going to
say. Well,
that's
it. We rotate every single day. So the banks are up here today. So it's probably, you look at the bonds. Bonds are trading slightly down here in the pre-market. So maybe it's going to be a risk-on day. It's early. It's 8:07. We get a better feel here in about 30, 40 minutes. We'll start to get a better feel if it is going to indeed be a risk-on day. But it feels like a risk-on day with oil trading up, financials trading up. We have the XLU. If we look at that, it's trading slightly in the red. TLT is down. And obviously food stocks are going to be weak. It isn't just going to be General Mills. With General Mills disappointing, you're going to see Campbell's Soup probably trade in the red here today, which is CPB. You're probably going to see a stock like Kellogg's probably weak. It's already offered down in the pre-market, offered down 20 cents. So I'd imagine some of your food stocks are going to show some weakness here off these disappointing GIS numbers.
Sticking with the food stocks, let's look at Darden, DRI. They reported this morning as well. Q2 EPS, 64 cents. That was in line. Revenue 1.642 billion versus 1.65. So hair lower there on the fiscal year 17 guidance. EPS in line of $3.87 to $3.97, and same store sales of 1 to 2%.
Yeah, and obviously this isn't going to move directly with food stocks because it's a restaurant, so it's a little bit different animal here. And Darden has actually held up quite well. Some of your other restaurants haven't held up that well. DRI has. I don't know if it's... Is it Olive Garden they still own, or Red Lobster, or they still own them both? Because they were talking about spinning one of them off, and I can't remember. I always look at Darden and I think Olive Garden and Red Lobster. And I like both of those restaurants. I think, the biscuits at Red Lobster are phenomenal. I obviously, I used to get that ultimate feast. You ever go to Red Lobster?
One time, actually. Yeah.
One time only?
Yeah.
Man, I love Red Lobster. I used to have, my parents used to take me there for my birthday every single year when I was a kid. I even loved it as a kid. But I like fish.
They own Longhorn Steakhouse, which I've never been to, Olive Garden, which I've not been to in at least a decade.
I was at Olive Garden 2 weeks ago.
That's
great.
Out
of franchises, it's one of the best Italian meals. Bang for the buck. I like Olive Garden. You get that tour of Italy. They bring out the lasagna. They bring out the chicken parmesan, and they bring out that fettuccine, and you're just loving life.
Oh no!
I'm a fan, man. I'm a fan.
Did you just
say? A lot of times I come on and I'm not a fan of the food or whatever it is, so then I don't like the stock. Well, I'm a fan of Darden restaurants, at least the food. I don't know. The stock is interesting.
Did you just say Olive Garden has good Italian food? Nick, did you hear that?
It does. Nick
is Italian. He says that's horrible.
Well, I'm not Italian. So my standards are probably a hell of a lot less than Nick.
Okay, all right.
So if you're Italian, you probably don't like Olive Garden. But I'm not Italian, so I enjoy Olive Garden.
All right. enough about the quality of the food there. So yeah, we got the stock there.
Let's just talk the
Trade
stock.
down this
It's been
morning.
on a pullback, so if you just want to talk technicals here,
Yeah.
had a nice run in November from 60 to 75. Then we continued running. It got a little overextended up there at 79.43. Pulled back, and it started to look like it's trying to form a little bit of a bottom here at 75. So 75 is a concern. If it takes that out today, and again, you start to get concerned 2.95%. It's a dividend play. I think if it takes out the 74.89 low, that's where I'd be concerned because there is a little bit of air below there. As long as it holds, call it around the 75 area. The bulls are still in control. Takes out 75, starts trading 74. Look out below.
I want to put the earnings on pause for a second because we got some stocks in the chat. AMD, first of all, they got an upgrade this morning from Mizuho to buy, but you guys in the chat are talking about this guy, and it's been strong.
Been unbelievable. AMD has been one of your best stocks, quietly one of your best stocks of 2016, and we got to give props to Ace because he has been, pounding the table on AMD the entire year. So good job, Ace. I know you still got some in your portfolio there too. It started the year at $2. It's now $11. So, you're talking about a five banger there. That is an impressive move here for AMD. Up another 2% here this morning. Is it getting a little overextended? Sure it is, but a lot of other stocks are too, and it's hard to fight these trends. So, 11.23, Mizuho's jumping on board, upgrading throwing out a buy there, rating on it there this morning. I don't know if I'm coming in with new money here, buying it after it's just run up, 400% here in the last year. So, but, I'm not going to argue with the trend here either. Trend is your friend, and the trend is still straight up.
Sticking with the same industry there, let's check out NVIDIA because I think that came up on the pre-market show because Goldman added them to the conviction buy list, right?
You're going to all the stocks of 2016. NVIDIA started the year at $26. And it's now $104 here this morning. So he's talking about a stock that is up 300% as well. So these two stocks been phenomenal here. NVIDIA might be, right there, close to AMD with the stock of the year too. Yeah, Goldman putting it on their conviction buy list here this morning. I feel like that is a little bit late to the party. I thought it might have topped out.
About 6 months. About 6 months late, but
about 6 months late. Well, they think it's going higher. So I mean, everybody's on board. My buddy Chris was all over this. He bought a whole pile of the stock back when it pulled back just recently. He says he called me up, and I wish I would have went with him. So Chris, if you're listening, good job. When it was at $94, that one day that it went from 92 down to 84.77, he's like, this is the buying opportunity, man. This NVIDIA buying this thing at 85. He's like, this is basically like the opportunity there, and he was dead right. 85 was the low. And here we are at 104, so he's made 20 points here in 2 weeks. So good job, Chris. If you're listening, good job. Maybe I should listen to Chris here a little bit more. We gotta get Chris back on the show. He's making some great calls. But
okay.
NVIDIA here, $104.50 this morning. It's up 3 more points. It's too hot for me. We're gonna have Nick Shaheen here on the show, and I always mess up what he says. But again, I'll try to say it there. So it's too high, to chase, but too hot to short. I think I said it right.
I think you said it right. The kiss of death from Goldman.
Stock Hunter's still long it. I mean, if you're long it, good job. I'd maybe bring up trailing stops with that. Starts to get back under $100, you get concerned here. But you're well above 100 here now. You got Goldman behind you. I don't see any reason to come in here saying this is the top now.
Sticking with the chat here, CNET reported that licensing deal with Novartis yesterday, and you can see how that baby reacted. Let me pull up the 5-day chart. There we go. Look at that move after hours.
Boom. Stock up 143% here this morning. So obviously these pharma stocks, these little ones can really take off when you get some drug news here. And this stock just explodes here this morning. What's the after hours high, Spencer? You got that in front of you?
$5.90.
$5.90. So we're trading $4.75, so a little bit off those highs. Somewhat concerning, but yeah, and $5 remember is always a big bogey because that's where a lot of these companies become marginable. Although I think a lot of brokers are hesitant to lend you margin on pharmaceutical stocks, but it depends on your individual broker. But typically at $5 they do become marginable. So that is always a big level, psychological level. So that's the first level that I would say is a challenge for it to try to get over 5, get a close over 5, and see what happens here. But again, stock up 142%. I like chasing stocks.
Okay, sticking with the pharmaceuticals, we also had Acadia. They had some news. Let me pull that guy up for you. They're moving this morning. Acadia met the primary endpoint in reduction of psychosis versus a placebo in this phase 2 exploratory study. So they met the endpoint, is what matters.
All you need. Met the endpoint, stock up 23% here this morning. $30 was the bogey. We had three highs right in that same area. I'm just going to go out to the dailies and actually, yeah, four highs right in that same area just back in November. We are above that right now. So I'd say as long as it stays above 30, that can maybe now act as a little bit of support. But if we open below 30, look out. So, these things can be funny. Sometimes you get a big lift, sometimes they drop, but you can know it's going to be volatile. It's already traded over 1 million shares here this morning, so it's trading very actively here this morning. But it looks good as long as it's over 30.
Yeah. You know what? Let me pull up a daily chart. Yep, looking good there on the daily. As far as the biotechs, that was the only movers for the. We can go back to earnings.
Well,
I mean,
Biogen.
oh,
We could
that's
talk
right. Oh, that's
Biogen. They're
right.
getting
That's
a new
right.
CEO here, so this was announced after the bell, and they hit the stock initially. They hit the stock all the way down. I thought I saw a 272 print. I don't know, Spencer, if you can verify BIIB if we did get that low. And we bounced back and actually traded into the positive. We're down here again this morning, though. We're down a buck 75 on Biogen here. What was the news there after the bell? BIIB. Who was the CEO that they're getting?
They have named their formerly chief commercial officer Michael Vanatzos is the new CEO.
What's that pre-market low?
From this
Get
morning
those
or after the bell?
after the
I
bell.
mean, 401. It hit 272.95.
272. I did see the 272
Yeah.
prints. So. Biogen, this is one of the investments in my portfolio as well, although I'm a lot smaller than I was because obviously I've talked about this on the show before. I bought it at 50, I sold some at 150, I sold some more at 250, I sold some more at 350. And I've still got a little bit of a position left in it there, and I'm playing with the house's money, so I'm just sticking with the last of it. It's interesting. I think there's value here. I think Biogen. Remember, it was even a takeover candidate. If we just go back into the summer, there was rumors kicking around that somebody actually was maybe going to buy Biogen here. I'm not sure I see that happening. I do think there's long-term value here though in the biotechs, and that's why I'm sticking with it. I think if you're trading this thing, it needs to hold that low of November, which was 268. If it takes that out, if I had it for a trade, I'd be concerned.
Yeah, I'm trying to remember that was back in August, right, from Biogen, because they had canceled out of a conference. But I don't. There was no. I can't remember if there was a specific buyer mentioned. I don't think there was. It was just like general, like taking offers. But no, nothing came of that, obviously. Okay, let's get back to the earnings. There was the only one really that we didn't discuss. I mean, do we care about BlackBerry? Not really. CarMax reporting they beat on the EPS and missed on the rev. We can discuss that if you'd like.
KMX going down. Yeah, let's talk CarMax here. I haven't looked at this chart in a long time. KMX always been on a pretty big run here too. November, everybody washed out 47.50, and then boom, taking off here. I guess the Trump rally helped this stock. 64.88, 62.36 now. The numbers here is just kind of hanging out. It's trying to decide whether it wants to go up or down. It is trading down a little bit here in the pre-market. I mean, if it turns around, the 65 is a huge number for the stock. I just tell you, KRX is often volatile. It often moves 3, 4, 5 points off an earnings report. It has not done that here yet. So, we'll have to see, maybe, but don't be surprised, if this thing opens down, if it falls another dollar or two, or if it opens up, then it starts to rally a dollar or two because the stock usually moves 4 or 5 points off an earnings report. So I highly doubt it's just going to hang out here down 36 cents. I think you're going to see a move here one direction or another. It looks like it wants to be down. So if it starts to take out that low just from 3-4 days ago, 61.27, then you think about 60, and below that you start to think about 58.66, which was the low on the 6th of December.
Last earnings report, really for the morning that's reported so far, is Valspar. They missed on the Q4 EPS and they missed on the rev.
Stock just hanging out here in the pre-market. It's only trading 205 shares, so hard to really get a feel for it here yet. Stock is trading down a little bit though. Had two candles, interesting, same, almost identical candles from the last 2 days. If you go just 2 days ago, 104.53 is the high. Yesterday's high was 104.50, which was 3 cents away. And then the day before, 102.65 was low, and then 102.68. So literally an inside day by 3 cents on the high, 3 cents on the low. You won't see that a lot on a $103 stock. So that's your range here. You got to look at, for today here, below 102.68, 102.65, then you think 102, and then below that, then you start to get ugly and you start to think about 100.
It's almost back to that October sell-off where the merger with SHW got called off by the FTC. It's almost back to that level though. I mean, it sold off there on the 28th.
Yeah, we got down to $98, I think, then, didn't we?
Yep, and we're almost back there. There is trading around
102.
Yep.
We're a little 4 points away.
All right.
So that's your number to think about if you get below there. Let's jump over here to a few other stocks I had on my list too here, Spencer. I want to talk Twilio here today because this is the lockup expiration is over here. So the lockup expiration ends today. So obviously you can get more selling pressure into the stock when these things happen. But the stock has already sold off so significantly ahead of it. You wonder if most of that is already priced in. And Drexel Hamilton apparently has the same opinion here because they're coming out this morning and putting a buy rating on the stock. Here, let's grab the Drexel note because I was just looking at it a couple minutes ago. Do you have it?
$45 price target.
Yeah, they put a $45 price target on it, and just they were saying that basically they think the majority of this, is already priced in this expiration, the lockup expiration. So I don't know. I look at it here too, and it's been straight down here. I mean, and Kramer, and we love Kramer. Kramer says a lot of things right there, but he was pounding the table on this thing back in September when it was 65, 70. He's very quiet about it now at $29. So this one he got wrong. But anyways, Twilio here, trade 29.15. If it can get back up and show an update today here, and it's not rallying here with the upgrade, obviously, or with the Drexel Hamilton price target, because people are concerned about this, about the expiration here today, the lockup expiration. So, but if it can somehow turn around today and get above 30.5, then it gets interesting. So I'm going to say I'm hands off on this thing until it can reclaim 30.5, get a close over 30.5, and then I might get interested. So right now I'm hands off though, just because that trend is ugly.
My concern is what does this say about like the IPO market as a whole? Because this was like the big IPO of the year, and
yeah, well, it didn't work out very well.
No,
it's almost back to those prices where it started.
Exactly.
It started back at $23.
I know, and so if we're gonna get Snapchat, Vice, etc. Next year, I don't know. This is not a good sign for the IPO market, in general. But that's what concerns me about
the
this.
IPO market has been hurting for a long time. And I think, there's a lot, you think about there's just not as many companies coming public as there were. We know the smaller companies are hesitant to do it because the small cap space in the listed market is a mess. There's not a lot of liquidity in these things. The big caps are great to trade in and out of, but it seems like everybody just trades the mid caps or the big caps, and not that many people trade the small caps anymore, and that's why they're kind of a mess. So you're a smaller company, you're hesitant to go public because the secondary liquidity just isn't there. And obviously, if you're trying to get in and out of the stock, it's kind of sometimes disappointing, and some people just don't want to do it. It's costly to go public, and they just aren't doing it. So we used to get a lot of IPOs, and we're just not getting as many anymore.
What else you got on your list?
I got a whole pile of stocks on my list here. You know what? This was one, and we talked about on the pre-market show briefly. WWE WrestleMania is coming this weekend to Detroit.
Not this weekend. It's coming tonight. And
tonight,
myself and
they have WrestleMania on a Tuesday night.
Myself and like a half of the Benzinga office are going to this thing. And
this is WrestleMania, like the WrestleMania, or is this just a wrestling event?
I mean, like I'm kind of along for the ride, but I'm pretty sure.
No, this is the WrestleMania because WrestleMania was always in April.
So tonight's WrestleMania, right? That's not WrestleMania. All right, so what's tonight? Oh, SmackDown. I'm sorry.
SmackDown is tonight. Okay.
All right.
So there's a few of the SmackDown.
I don't know
like,
these things.
WrestleMania, I remember. I was a huge wrestling fan as a kid. I'm not a wrestling fan anymore. I don't follow it. But as a kid, I loved wrestling. The Hulk Hogan days, the Roddy Piper days. I don't know if this might be dating you a little bit, Spencer. I don't think this was before you maybe were even around. But, I loved wrestling as a kid. I never missed it. And that's why I was like, WrestleMania. I remember WrestleMania 3 when Hulk Hogan slammed Andre the Giant at the Pontiac Silverdome in front of 95,000 people, and they blew the roof off the place. Yeah. That was amazing. So
times were good.
WrestleMania.
Times were good back then.
But then, I found out when I was 10 years old, I was fake.
Yeah.
And then, I started to grow away from it. And I'm a huge sports fan, but, I don't watch wrestling anymore.
So I stand corrected, not WrestleMania, SmackDown.
It's SmackDown.
But we're all going. It's in Detroit
tonight.
Let's
talk WWE anyway.
All right, let's talk about it. We haven't
I still call it WWF because as a kid it was always called WWF. It was World Wrestling Federation. Now they call themselves WWE, World Wrestling Entertainment. So whatever, Vince McMahon. $18.93 is where it closed. $21 is where, or $20.28 is where it got up to 5-6 days ago. There's a gap in that chart. And if this stock could get into that gap, it starts to get interesting. So 1915, there's a gap all the way up to 1990. Or so if you can get in, or 1976. So there is a gap If you get up and reclaim that 1915, you start to think maybe about $20 again. The other problem, though, is if this stock starts to show weakness. You have 4 or 5 lows right in the same area, 1835, 1845. And when they take out those lows, 3, 4, 5 times, they can sometimes take them out hard. So I would say this is in a trading range until either breaks above 1915 or it breaks down below 1835.
Shubs is in the chat.
Shubs is correct.
Clarifying my ignorance on this subject. Thank you.
Thanks, Shubs. We knew it wasn't WrestleMania. The day was wrong. They wouldn't have WrestleMania on a Tuesday.
Listen, I'm just along for the ride here.
Who's the big? Ask Shubs. Who's the big? Because you're not a big wrestler. Who is the big wrestler now? I don't even follow WWE anymore. Because obviously, you had Hulk Hogan all the years, and you had Stone Cold.
Who's the biggest wrestler?
Who's the big
days?
wrestler now?
Who's the big wrestler? Do we know?
Shubs
John Cena. Is John Cena still around? I don't know. John Cena and I couldn't tell you anyone else.
It all went downhill when Hogan left. That's in my opinion.
Iron Sheik, Aces. Iron Sheik.
I still loved Hulk Hogan. And he's talking the Iron Sheik. They were good too, the Heenan family back in the day. Yeah. Oh, I remember this.
Yeah. All right. I do want to get to
King Kong Bundy, Big John Studd.
All right. All right. I want to get
reminiscing on the pre-market show.
I want to get to BlackBerry. I want to get to BlackBerry. We have a couple of headlines.
We didn't talk BlackBerry?
Well, I want to get to it just because we have a couple of headlines out of the conference call right now. So as far as earnings, 2-cent loss versus 1-cent loss. Estimate revenues of $301 million versus $332 million. So they missed. But we got the CEO saying some things. Here's what he's saying. He's saying that the handset, remember now they're a software-only company. They don't make their own phones anymore. The handset business made $5 million in profit, up from an $8 million loss last quarter. Looking good there. Says that the software-only model will be positive for revenue growth, and margin growth will be driven by favorable overall revenue mix. The handset thing strikes me as notable. $5 million versus $8 million loss quarter over quarter.
It's trading up in the pre-market. Had a nice candle going into the earnings yesterday. Needs to get back above $8. And BlackBerry is notorious for rallying on their initial numbers and then selling off by the end of the day. So I'm always cautious on BlackBerry whenever it is trading up. I've seen BlackBerry in the past trade up over 10% in the pre-market, open up 10% at the open, and then just slowly leaking. And by the end of the day, it's in the red again. So the stock is like eternally hated here. But, yes, those stocks can eventually turn around too. And if you're combing the ditches and looking for something that really hasn't run with the overall market, BlackBerry does fit that description there. If it can get above 8, it needs to hold $8. And then, you can start to think, okay, well, maybe we could eventually make a run to 9. But $8 is the bogey still for it. It's even struggling with it here in the pre-market there. I'm not going to get interested in this until you get a nice close over $8, at least for a day or two. That's what Joel taught me when I was a young little buck trading there and back in 1999 at the Bright Trading Office. It's like you need to get the close above that level. It's not just good enough to trade above it. You need to close above it. So we need to close above $8. We're saying that for Joel as he's in the sunny south.
Yeah, and you see that spike there in September. That was the software news that they're no longer going to be making their own phones, and you can see what happened after that announcement. All right, Dennis, 8:28 now, about 7 minutes till we'll get Nick on the line. What else did you want to hit on?
I've got a few other stocks here. Just jumping over to the ratings changes here. We talked NVIDIA briefly there, but we didn't talk Western Digital and Goldman Sachs. Goldman Sachs is getting upgrade here this morning to neutral here. Goldman had a sell on WDC. They're raising up to neutral here this morning. And stock is trading up and bid up here in the pre-market at $69.01. And I tell you, this stock has got to be one of those you talk about for 2016 as well. Because it started the year, if we just go out to the weeklies here and look at where it started the year, it started the year down around $45. So 69 now, so a pretty good year for Western Digital. Anyways, back in April, it got down all the way to $34. Joel bought the low almost on this one. Not very often Joel's going to get the low, but he did. So 60.01 is where it's bred here right now. $70 the bogey, gets above 70. You start to think this run continues once again.
Yeah, Joel bought around 35. I want to, right?
He got right near the low,
yeah.
Like right almost at the low, and he's held this long.
Yeah,
like that's what's impressive because Joel's a little bit of he's got that scalper blood, floor trader all those years.
Yeah,
he doesn't usually hold on to a stock where it doubles for him. That's why I keep asking him. I asked about 50, you selling? He's like, I'm going to hold it. I asked about 55, you selling? No, I'm going to hold it. Yeah. 60, 65. It's $69. He's still
Yeah,
holding.
he
Good
he
job,
he,
Joel.
he always says he can't help himself, but this one he's managed to help
I
himself.
always sell too soon too.
So, all right,
Scalper blood.
Easier said than done. Easier said than
Oh
done.
yeah.
All right, we had WDC. We talked AMD. We talked Nvidia. Ratings
There was a
change.
lot of little
Oh,
ratings
we had
changes there if you want to
Sarepta.
just list off a few of them because there was a lot of ratings changes, but nothing really on any of the big stocks. It
Well,
was all kind of
we
meat
had
stuff.
Goldman on Sarepta as well. They initiated coverage at neutral and a $40 price target for SRPD.
Sarepta's interesting. Let's talk Sarepta here because you just put it all in perspective, and obviously the whole autopleurosis thing, and and it was rumored, and it gets approval back in September. You could see the huge spike when it spiked up from $28 all the way to $55, and then kept running all the way up to 62. Well, over the course of the next 3 months, we have leaked the entire gain here now, and we are back to where it was originally when it got approved. You know how I always like that setup. I'm just a fan of buying the stock back to where it came from. So I'm interested in Sarepta here. I don't know from a valuation perspective. I don't follow the stock closely enough to know any really of the fundamentals of the others aside from the big drug there. But I like the fact that it's trying to hold down here now. You've had four lows, kind of in the same area, just under $30. If this thing could get back up over 31.56, which was a high from 2 days ago, maybe find some interest towards the end of the year here again. So I'm interested in Sarepta. I haven't pulled the trigger on it, but I'm interested.
And it seems like they're on the fast track. For the DMD drug. It's happening. It'll be covered by Aetna. That came out a few weeks ago. Good news.
You're not chasing now.
No.
And that's what I don't like chasing stocks.
Yeah.
Everybody was chasing it 3, 4, 5, 6, 2 weeks after, buying it up at $62, think it's the same thing, or significantly underwater. So you're buying it now. You're able to play their heat. You're buying it a lot cheaper than a lot of people.
Yeah.
So and you've got the news. That the drug got approval. So I don't mind. I don't mind it here.
Okay. What else?
I'm kind of a fan.
As far as small rating changes, I know there are a few. I didn't write that many of them down. Which other ones did you have?
There's like Arch Coal got initiated a buy and MKM Partners. We had there's about 35 of them here, but they're all pretty small. Triple BY Bed Bath and Beyond got initiated a sell at Loop Capital with a $35 price target. Full disclosure, I am short that stock, so I'm happy about that. That getting initiated there. I'll limit my comments just because I already have a position on it. I don't like talking my book.
What about
we talked AMD.
What about JD.com? Buy at Evercore and a $33 price target.
That's interesting because we haven't looked at JD.com in a while here. So it's getting initiated with a buy at Evercore?
It is.
And stocks are trading flat here in the pre-market there. It's been ugly. It's an ugly 3 days for it. And 27 was a wall of resistance. It remains a wall of resistance. It's hard to get on board here. I mean, $1.50 higher, you got that wall of resistance. So, and you have nothing below here. So a 25, 60, I almost like it from the short side if it gets back up in the mid-26s.
All right, 833. Before we get grabbed, Nick, let's look at the imbalances.
All right, first time I'm looking at them here today, too, so bear with me. I'm bringing up the information right now here. And trying to grab it. I've got too many things open on my screen. Okay. Twitter, 38,000 to sell. Bank America, 184,000 to sell. Going in the opposite direction because Bank America is actually trading in the green here by 14 cents. The financials are strong this morning. We already talked about that. Morgan Stanley, 50,000 to buy, so that's going in the same direction. Verizon, 40,000 to buy. Pfizer, 39,000 to sell. Home Depot, 23,000 to sell. That's small. Not seeing too much else here. Let's jump over and just look at the technicals just on AT&T and Verizon because these two stocks were thrown out the window here right after Trump got on board. And then after that, this just started to run straight up here. So Verizon, you think of those as defensive. You think, with some of the other yield plays that they would have been weak here over the course of last month. Not the case. Verizon and AT&T have both had incredible runs. AT&T is up 6 points in the last month, which is a big move for AT&T. Verizon up over 6 points as well in the last month. So now you think, whoa, this is kind of, we're getting a little bit extended here to the upside on these things now, especially if you think interest rates are going higher. Do you think interest rates are going higher next year? These two stocks, are typically move more with bonds than they do with the stocks, but it's one in the opposite direction. So I own AT&T in my investment portfolio. I still like the almost 5% yield on it, but it's a little bit overextended here now.
What is the latest on this merger, this AT&T Time Warner merger?
Well, there was rumors that Trump was gonna. I saw Gasparino tweet out on Friday night.
I saw that too.
You saw that? Yeah, that he was tweeted out that Trump advisors are gonna tell Trump to nix the deal basically.
Yeah.
And and Time Warner was trading down on that news. After Hours was trading down even yesterday morning on that news, but then it bounced back. It was just a tweet from Gasparino, and it wasn't about Trump. It was what his advisors going to say. Trump had said before the election that he would stop this deal. So there was concerns, but now everybody's kind of forgotten about that. I mean, there is a 108. I think it's a 108 price on the table here. So obviously, but it's in stock too, so you have to follow what AT&T stock is doing. But if you think the deal's going to go through, there's still some money to be made. But if the deal falls apart, you think Time Warner's back at $80 bucks.
Yeah.
So you're kind of in the middle here now, 95, maybe upside's 105, 108. Downside's 80. So when you're sitting here at $95, you think, well, there's probably a little more downside than upside almost here now. So I'm a little cautious, especially just how Trump tweets. Just imagine one tweet coming out saying, "I don't like this Time Warner deal." Boom, you're going to see Time Warner fall 5 points on that.
Yeah, it's sad.
So you get scared of that. You got to follow that Twitter account, that Donald Trump Twitter account, because he moves stocks.
Hey, we have somebody here on Trump Twitter watch. Okay,
you got somebody just hired.
On our
Your
news
job
desk,
is to watch
on
Trump
our news
Twitter.
desk, Trump Twitter watch. All right, let's go take a quick break, and we'll be right back with Nick Shaheen. You may have seen his product on MarketFi, Create Income with Option Spreads, and we'll be right back.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors. This is Benzinga's Pre-Market Prep. I'm Spencer Israel here with Dennis Dick, and now we are joined by the one and only Nick Shaheen from Create Income with Option Spreads. Nick, how are you doing out in California? Nice, sunny, warm California.
Sunny, but not warm. I know by many standards it's not freezing, but in the morning it's in the low 40s, high 30s.
Yeah, when you say not warm, what do you mean? Low 40s? That's nice. That's nice. Must be nice.
But it is nice. Yep.
So Nick, we were just talking Trump tweets, and Benzinga's got somebody hired just to sit there and just stare at the Trump account. What's your thoughts here?
I didn't say that.
On the president-elect being able to tweet and move a stock 5%.
I don't mind him tweeting to get elected, but as a president, tweeting willy-nilly like that creates undue grief for a lot of people. But it also can be an opportunity. Like the F-35 tweet on Lockheed Martin sent out a note to go along on it, and the write-up is nicely up via very conservative option plays, and they can close them now for profits. So if you see an opportunity in something you track, you can jump on it.
So this is interesting, actually. I just want to interrupt you there because you're fading these tweets.
Well, it depends because I knew that it was a negotiating tactic where he throws the subject out there and then says basically let's sit down and talk about it. It's not going to get canceled. There are contracts in place, so and even if it does, it's going to be a little blip. So if you know something about it and you have an opinion, you can structure a relatively safe trade. I mean, I didn't throw myself with full bore at the line. I just did out in time credit put spreads well below current price. So even if I'm wrong a little bit, I have time to unwind for minimal damage. So if you know something, if you're tracking a ticker and it gets hit somehow by a tweet and you don't believe in the long-term effect of that tweet, then that creates an opportunity.
I mean, the Boeing was a great example of that. The stock traded down 3 points on that Trump tweet, and by the end of the day, it was trading the green, and we've been straight up really since then. So I think the stock went under 149 there in the pre-market on that Trump tweet about Boeing, saying, obviously the planes were too expensive, and we're gonna, maybe look at other options, and obviously, that's market shrugged that off almost that day.
Yeah, and it's like it's a tumbleweed. It takes on a life of itself. CNBC gets a hold of it, the media gets a hold of it, it gets tweeted, retweeted, and all kinds of stuff, and everybody assumes the worst right away. But I can't imagine they can unwind billions of dollars worth of contracts based on one person's opinion, even if he's the president.
Yeah, exactly. Okay, Nick, let's move away from presidents and let's talk here. We were talking how, this market has been moving here. We're going to come in towards the end of the year. Next week, we're going to get, the official Santa Claus rally season here. Do you think we're going to have a Santa Claus rally that we typically do? Because I was looking, it's like 1.3% that we typically rally between Christmas, and the first 2 days of January there. What are your thoughts here? Is it already priced in, or do we continue this amazing run up?
So what do we call this rally? Oh my gosh. We are so complacent. I mean, yesterday...
This is just a Trump rally still. Nothing to do with Santa.
Okay, right. But it's during Santa's time, right? So let's say he's the elf. And yesterday, CNBC, they're all baffled. It's like, how are we not at 20,000 already? We just crossed 19,000. We are such ingrates that we don't say thank you for the 1,000 points, 900 points in 2 days, basically.
We want the extra 100.
Why are we not at 20,000 already? And it just shows you the level of recklessness that's in there and the entitlement that we should be way higher than this. On what? On the promise that we're going to get everything done. I love the opportunity that we get all this stuff done. Believe me, I said it as soon as he started running. I said, this guy will shake up everything because he's not the typical political structure, operator. But we can't give 100% of the credit. So I guess what I'm saying is from now, it's a matter of checking off the to-dos that we may or may not get. So if we priced in a perfect scenario, we should meander and then have some more room for upside. But I need to see proof before I start chasing upside. So I guess what I'm saying is there's also the theory that people are delaying selling into 2017 because of the possible lower taxes that we're going to get in 2017. So if that's the case, then we should see some letdown in January. So if I want to set up a structure, I'd probably sell some credit call spreads way higher than current price 2-3 months out and see how they produce. And then I can balance them out instead of selling credit put spreads, which is a bullish play in the indices. Those bearish plays would be in the indices like SPX, SPY, IWM, whatever you want up there. But then I wouldn't balance them with credit put spreads in the indices because I don't trust the bottom in the industry. I would better trust the bottom, say in Apple or Google or Facebook, some quality stocks. So the credit put spreads will be balanced in quality stocks. So if markets continue rallying, at least I have some bullish plays that are offsetting some losses that I'm accumulating up there.
Let's talk about that tax play just for a second here, because I agree with you. I think there's some people sitting on some big gains here, and they think, why am I going to sell right now? I'm going to wait till after 2017. I don't have to pay the tax for another year. Plus, I have the wild card of potentially, paying lower tax if the taxes do get lowered by Trump next year. Well, I'll tell you, though, from my experience, that is a mistake. It's always a mistake. And if you want to sell the stock, I always say sell the stock. Don't, hold on to a stock because you don't want to pay the tax. Because
I totally agree.
Because I've saw this happen before, too. And I saw it back in the tech bubble when, a lot of traders were sitting on stocks that went from $5 to $100. And they're sitting there like, I don't want to pay that tax, so I'm not selling the thing. And a lot of those, investors in there lost it all. Some of these stocks came all the way back down to $5, and some of them went back down to zero because we know, the tech bubble was just incredible back in 99, 2000. I learned at a very young age. I was like, I will never, make a trading or investing decision based on not wanting to pay the tax.
I totally agree. I mean, if you want to sell the stock, book the profit. You're going to have to pay the tax anyway. Besides, somebody said, I read an article, I don't remember who it was, but somebody, I guess, that knows their stuff. And they said that, Reagan came in that wanted to redo taxes, and he didn't get that done until his second term. So it may take time. It's not like everybody's going to play nice And the Democrats are not dead. They're going to do something about it, and they're going to make it difficult to pass stuff. I'm not a political expert, but I know there are loopholes where the Republicans can get around the majority, et cetera. But it's not going to be an easy path to everything get done. So anyway, meanwhile, I track the markets via, it looks like we have tag team rabbits. Back to your question, is like, are we going to see a rally? Well, yes, we could, especially that there's no volume. It doesn't take much to move the markets, and we all know that. So there's tag team rabbits, and this morning rabbit is oil. And the other sleeping giant are the mega caps. So this is FANG or FA, whatever you want to call it, from Kramer. And he's called, they're back twice, and he was wrong the first time, and he is 5-6 candles wrong into the second time. I marked it on the chart I just threw in there. So these are mega caps, and right at the forefront right now is Apple. Technically, 110 was a wall, and they got through it. And I said if they get through it, 112 is the next, 112.30 was the next wall, 113.30 was 33 or something like that was the second wall. And then I said if they get through that, 15, 16, but the ultimate goal is like 19-ish or low 20. But I don't know if they're going to get there, and they're struggling to get there. But if they do get there, that's another rabbit, and it may infect all the other mega caps that are sleeping. And because now we had a couple of red days in the financials because the rates are not spiking as much anymore. So there's a whole dynamic all connected. You got to look at the dollar, which is in a breakout, and it's been coming a while, and it could be a lot more to go. And I'll show you a little messy chart on the dollar, but it just tells the potential. And bonds are also technically bullish, or have been, and we've been saying it even on your show. So all of this is connected, but you have to know how it's moving everything. So if you're tracking the small caps, you have to look at the utilities as well. And you have to look at the financials because they're a good size of it. And you have to look at the individual banks as little rabbits inside the financial, like Bank of America. So if you're trading fast, you have to have all of these on your screen. If you're trading slow, just step away from current prices. I use options way out in time. This way, they lost a long time and they tie up some money for a long time, but they're easier to manage. And if I don't have my hand on it day to day, that's the easier way to go.
Nick, okay, let's jump into some individual stocks because you're watching the options. What's on your radar here coming in this week?
Well, last week I saw a couple opportunities intraday with Lulu to break down, and it did. I had another friend who pointed out other retailers like that. But I'm worried about retailers from my personal shopping. And I go to Costco once or twice a week because it's close. And I don't see as long lines. I know it's a great company. I would go along it if it gets hammered. But I'm waiting for opportunities. Any stocks that get hammered, yes, I can dabble long. But overall, I'm trying to see if I can short the first quarter cautiously via the indices and balance them out with some longs. So I'm worried about the retail because I also went to Best Buy, and the salesperson there, she volunteered. I didn't ask. She volunteered. I was shopping for something, and she said, well, let me see if it's cheaper online somewhere else. I was like, wait, what? Okay. And she takes her phone out, and she starts looking to find me a better deal, and she did. So she just cost her company money. And I didn't even ask for it. I was going to buy it. I thought that was a desperate move. I don't know if her manager told her to do that or what. And so are they ready to play like Amazon? Okay, they're taking away a sale from Amazon, but how is that going to impact their P&L? So that's the big question mark here.
Jumping over here just to the oil stocks because they had the big run, they pulled back here a little bit. Now some of them are meandering here, and they're looking like they want to go one way or another. If you want to jump into some individual stocks, like ConocoPhillips, kind of just hanging out here the last couple of days, although up a little bit here today. ExxonMobil, the big run up above 92. It's back down here at the big $90 psychological level. And Chevron has actually been, one of the outperformers, and it's had an incredible run. Started, end of October down $100 up to 117. What do you think is going to happen with some of these oil stocks?
Well, if you believe that oil is going to hit its full potential, which was the high 50s, low 60s for me, like 58, 60. That was the technical target for the breakout in oil, but it fizzled, and here it is trying again this morning. So they tend to track that. So I would watch for oil in general, and they haven't proved to me that, okay, yes, they want to plow through already this time, or this time it's going to work. However, these are good companies, and they will likely survive any downturn in oil. So I can't chase them here. Let's put it this way. I want to see more. They pay dividends too. So how is that going to play out with higher rates? And so I would wait, especially like Exxon. Did I throw the chart in there?
Conoco, you did.
I did?
Yeah.
Okay, so what am I looking at
Conoco,
here?
we didn't see Exxon, I don't think.
Oh, okay. So Exxon is looking like it's tight with the ranges. You get higher lows and kind of 2, 3 lower highs. It comes to a point, so usually it needs to break out or down. It's got to move from here. Energy is gathering, and it's going to release somehow. So it either tries to retest the recent high of 93 or revisits the 88. So if you have a gut as to which way it's going to go, you can play that in the short term. Or if you want to go long it, I'd wait to see if it gets to 88, and then I throw some credit put spreads below it.
Tesla, been on a pretty big tear here. Everybody was throwing it out at $180 at the beginning of December, and just quietly here it's run 23 points, or up over 10% in the month of December. Think the Tesla run continues, or is it getting long in the tooth?
Well, I'm going to throw a chart in there that tells you how I trade it. Tesla, I don't care if it's long in the tooth or not. Here's the only way I trade Tesla. These boxes. The 2 green boxes that you see were an iron condor that I sold, and it worked out beautifully. I don't care. As long as it stays away from those 2 boxes, I made money. The other boxes are potential ways I'd go long it for the bulls, and those are actual trades that I wrote up for someone. So these are also winners because you see it moved up in the recent ticks. So it's nicely tied to 200 because of faith. So it will take something to break that faith. A headline. I think it's going to have to be a dramatic headline, and I just don't see one imminent unless a big flub from Elon. So for now, I go long it via credit put spreads way out in time, and not way out in time, way below current price, as close to current time as I can. It's not always doable via credit put spreads, which is bullish play. And if I feel really gutsy, I'll balance it out with a credit call spread. Otherwise, I just let time make me money.
Last stock to ask you about is your baby price line. Do you got some options open on this one?
I do not. I have not looked at it in a while.
Really?
Yes, because
it was always your bread and butter.
I know, but I've been busy. I've been busy talking. I've been busy talking and teaching, so I've actually lost money last week a little bit because I couldn't manage an IWM intraday scalp as well as I wanted to. But it was fun. Well, technically, it's not looking good because the double bounce on some level here. What is it? I'm eyeballing it. What is it? 1480-ish eyeball. I do have a longer chart here, so let me throw it in there for you. But it is a good company, and if it's hard to trade when it's right in the middle because it's such a fast mover. So I usually only need to trade it at extremes, one extreme or another. I should have traded it at the 1600, but the markets were so bullish, that it was almost suicide. So I'd rather trade it when they hammer it down, and if they do, then I'll go along it with both feet. So until then, I just watch it. I guess I don't watch it like I just said, but it's a good company, well managed. It's global. It will move with the market, and it moves faster than the market usually.
All right, Nick, thanks a lot. We will talk to you again next week.
Can't wait for it. Thank you, and Merry Christmas, Happy Holidays to everybody.
Yeah,
thanks, Nick.
Same to you. Same to you. All right, Nick Shaheen, the one and only Nick Shaheen. I was looking for movers during his segment. Not a whole lot going on this morning.
I mean, we're starting to get in the quiet period. There's going to be some earnings. We're going to get a couple of big reports here tonight, so we might as well preview those. We're going to get Nike and FedEx reporting here after the bell, and everybody's been watching this Nike report because Nike had just been hanging out here around this $50. We talked about it yesterday, and like I said, if they disappoint, this thing could be well below $50, so it's all going to depend on what is going to happen here, what they say during the report here tonight. But I think expectations are kind of medium for Nike. I wouldn't say, like a lot of times you see a stock, that's down 10 points. Well, Nike doesn't have to do much to go higher, but people want to sell. They want an excuse to sell this thing. So Nike better beat, and they better beat handily. And if they don't, I think Nike's going to be well under $50. So hopefully they beat, and hopefully can hold on here. But I'm skeptical here on this one. I'd be nervous because it's hung around here at 50 for so long. There's been a lot of sellers here in the course of the last month that has not participated at all in the Trump rally, although a lot of retail hasn't. I'm just concerned that Nike might disappoint, and we might actually fall under $50 and be significantly under 50 by tomorrow morning.
I'm always watching Nike as it relates to Under Armour. In terms of market cap, it's not even close. Obviously, Nike's is the king, but Under Armour beats earnings quarter after quarter after quarter after quarter, and Nike,
and doesn't go up.
Yes, that's true.
That's the one thing. Under Armour's been reporting some okay numbers here. Like on the last quarter, the numbers were okay, and they hit it. They hit it hard.
Yes.
So that's why I'm scared on Nike here. Like that Under Armour chart is ugly, and the numbers haven't been that bad. So I don't know. I'm a little bit concerned here. Like Under Armour, just looking at the UA chart, if we go back just to a year ago, this stock was, kicking out even. In this summer, it was $45. Mm-hmm. Now it's $25. Mm-hmm. And it's sitting there. And there's maybe some value here now in Under Armour. I think it was a little overextended up there. But, and it's trying to form a bottom here around the 25 area. So, from a technical perspective, you could argue nice support here at 25. But all going to depend on Nike tonight, too, because if Nike gets hit, they'll hit the Under Armour as well.
Yeah.
So Nike needs to hold $50. It needs to do enough to keep the stock above 50.
Yep, I always I sort of watch the two as like a pair trade.
Oh, they move together. Those two are paired.
Yes.
The pair traders trade those two with each other.
Yes, okay. And then we also have FDX going after the bell today. I think the last of the big ones for the week.
The stock has just been hot. They want to buy it. I don't know. This is another one. Like I always have that opinion, coming if it's run up, they really need to beat, big time here for it to go higher here. But it's a weird market right now. And I don't know, for whatever reason, they just want to own FedEx and UPS. Maybe they think Amazon's taking over the world and FedEx and UPS are going to continue to be the shippers for them. But, and obviously we worry about Amazon shipping their own packages. I've worried about that in the past, which is why I sold my FedEx stock. And I sold it too soon because I sold it down the 170s and it's 197 here. So here it is, hanging out 198.50. It's been such an incredible run. FedEx says something good. This stock will make new all-time highs.
One thing we were talking about on the desk like maybe Monday or Friday was everybody needs boxes, right? Everyone needs FedEx needs boxes, Amazon needs boxes. So what about these box supplier companies? Because
who are they?
I don't know. That's what we were kind of talking about. We were throwing around the idea. I didn't get too far into it, but everyone, Amazon, how many items do they ship a day? A bajillion. And that means a bajillion boxes.
Chad, help us out here. Who are the big box makers? And don't give me BOX.
Don't give me box.
Although that should be the ticker symbol for it.
Don't give me box.
But they don't make boxes at box. Although they should.
I should have made that joke. You beat me to it.
I beat you
disappointed in myself.
Chad, if you know who the box maker, I don't have no idea. I don't follow you close enough. I mean, you could say International Paper probably maybe makes the paper for the boxes, right?
Maybe.
Been running up. I don't know. Maybe I'm reaching there.
Maybe. I don't know.
And see, Larry says International Paper too. That's what I was thinking. Maybe IP.
All right. I'm hoping IP charges.
Maybe
I haven't looked at IP in a while. Oh, look at that.
It's been moving. IP's had a nice little run, 44 to 54. Nice. Again, that's a Trump stock though. Yeah. So that's been moving up here off Trump, and obviously, these Trump stocks have had a lot of run. I don't know if I'm buying it up here.
Yeah. All right. 8:57, Dennis. Any final thoughts before we get out of here?
It still does appear to me like it wants to be a risk-on day, although we've seen some of the financials come off the highs a little bit. We're still seeing Goldman up over $1 here in the pre-market. JP Morgan's up 50 cents. Bank of America's trading up 0.75%. Some of the financials looking stronger. You're looking at some of the tech stocks. Some of them look stronger here too. Other industrials are a little bit stronger. And you can look at your TLT, and that's sometimes a very good gauge whether it's risk-on or risk-off. And when you're seeing the TLT trade in the red, you automatically think maybe risk-on day. Maybe they're going to start selling the bonds. Maybe they're going to start sell stocks like the XLU. So right now, I'm obviously a little bit more bullish on some of the more risk-on plays, and obviously a little more bearish on some of the defensive plays. So you think of your MOs and your tobacco, and your food stocks are going to obviously be weak because we had a weak General Mills report here. So I'm very biased to sell the food stocks this morning, like a Kellogg's, like a Campbell Soup. maybe even go and look, at potential Mondelez, although Mondelez is still potentially in play with the rumors last week, so I'm a little cautious on that one. But I think Kellogg's and Campbell's could have a rough day too. If General Mills stays down, it's down 2 points here in the pre-market.
All right, previewing tomorrow's show, a pair of guests for you. First, we got Tim Anderson, live from the floor of the New York Stock Exchange. We haven't had Timmy on in a few months. Also, we're chatting with Cody Willard, the former Fox business anchor. Now he runs tradingwithcody.com, is the co-CEO of a site called Screwtify.com. So looking forward to those two guests on tomorrow's show. If you missed any part of today's show, catch the whole thing again on YouTube in like 10 minutes, or on the podcast on iTunes, SoundCloud, and Stitcher. Just search for Benzinga or PreMarket. Also, don't forget about Benzinga Pro. It's Benzinga's real-time news platform. You can get a free 2-week trial by going to pro.benzinga.com or calling us up at 313-723-2000. I myself will walk you through a demo if you are so inclined. Last thing, please always remember that all the information, material, and content from our show is for informational purposes only, not meant to be investing advice. That's it for now. My laptop is about to die, so I have to get out of here anyway. Hope you all have a good rest of your day, and we'll be back with you folks tomorrow morning.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.